Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. The website's InsideRealEstateRadio.com, InsideRealEstateRadio.com. We were talking with Kevin Hamus there, owner of Ideal Floors. Thank you so much, Kevin. And now it's time for a little mortgage talk. We got Terri Wagner right here. Her website, TerriWagner.com, TerriWagner.com. And what's up, Terri?
Good morning.
Good morning.
I thought today we would talk about when is a good time for me to buy if I've had some credit issues. You know, everybody kind of goes through them sometimes.
Sure.
And why not start off 2017 with knowing when you can get back into a home? Because I still believe that that's everyone's desire is to be a homeowner, or it should be. I think it's a great investment.
I agree. New credit, new
right.
home.
That's right.
There you
Absolutely. Go. So I thought I'd just kind of go over timelines on how long you need to wait or when we can get started on you again. So if you're looking at doing an FHA loan and you've had a foreclosure, we're going to have to wait 3 years if you've had the foreclosure since, and this gets a little tricky, since the date of the deed transfer. Not the date that you moved out of the house, but the date that the deed was transferred from your name back to the bank. That's the date we use.
Which is usually, a few months after.
Right. So we have to pay attention to all that. Right. So it's 3 years on an FHA. You have to wait 7 years if you're planning on doing a conventional loan. 2 years on a VA, which is a little bit of a plus to me. I think that's right. A good service that we provide to our veterans. Mm-hmm. But then there's a conventional loan that allows for extenuating circumstances, kind of like Richard was talking about earlier. If you had a death, your spouse died, and that's an extenuating circumstance. Mm-hmm. Then you'd only have to wait 4 years instead of the 7 on a conventional loan. If you've got foreclosure and a bankruptcy, it's basically the same thing. It's going to be the same timeline. 3 years on an FHA, 2 years on a VA, and then it's a little different on the conventional loan. If it was included in a bankruptcy, you only have to wait 4 years.
Okay.
If you have a deed in lieu of, and I want to spend a minute talking about this, deed in lieu of a short sale. Or a short sale. So deed in lieu of is you're handing your deed back in. Short sale is you are selling your home for less than what you owe on it, and the bank is accepting the short payment.
Right.
Okay. So a lot of times what these mortgage companies will try to do is modify your loan for you. And I don't understand this. They always want you to get past due before they'll modify you. Don't do that, because it makes it more difficult for you in the long run. Give me a call. Let's talk about the whole situation before you do a loan modification with your current lender, because in my opinion, that's always a bad idea. If you're wanting to sell your current home and purchase a new one, and you have a short sale, it's only 2 years on a conventional loan that you have to wait from that short sale if there were no delinquencies. So if you didn't get past due, your home was just worth less than what you owed on it, then we can do something.
Okay. So
it's important to kind of explore different options, not just what your current lender is telling you have to do. There is no wait period on an FHA loan. If you did a short sale, but you weren't past due at all, then you can do an FHA immediately. No wait time on that at all.
Okay.
2 years on a VA, and then if you've got extenuating circumstances, it's a couple of years there too. All right, bankruptcies. Let's talk about that for a second. You know, you've got Chapter 7 and a Chapter 13. Chapter 7 is where you discharge everything. You don't pay anyone back. Chapter 13 is you go through the payment plan, and you're making payments to your different creditors at a reduced rate, and you're on a set period of time that you have to pay this out. On a Chapter 7, if you filed for a Chapter 7 and you're wanting to purchase a home using an FHA loan, you have to wait 2 years from your discharge date. If you filed a Chapter 13, you can still be in the Chapter 13 and just 1 year into the payment plan. Now, we have to get a letter from the trustee saying, yes, it's good for you to take on this new debt, but we can certainly still move forward with you on a purchase, even if you're in Chapter 13. And I don't think a lot of people know that.
No, I don't think they do either.
On a conventional loan, if you're Chapter 7, it's 4 years from the discharge date, 2 years from the discharge date if it's a Chapter 13. Again, it's a little different on the conventional. Those are discharge dates, not file dates.
Right.
FHA, it's a file date, 1 year. On your VA, it is 2 years from the date of discharge on Chapter 7 and 1 year from the payout period on a Chapter 13. So you finish your payout and then you wait 1 year. Okay. But again, you've got those extenuating circumstances. It can be medical. It can be loss of spouse. There's be loss of job. It could be reduction in income. You know, you were laid off for a while and then you went back to work, but you went back to work at a reduced amount of income. Those are all extenuating circumstances. We have to go back and we have to do all kinds of paperwork, but it's doable. So I just kind of want everyone to know that just because you had to file bankruptcy maybe this year or last year doesn't mean you can't be a homeowner.
Right.
Because it's still a really good time to purchase a home. You know, we talked last week about interest rates going up and they're still climbing a little bit on us. But you know what? They're still great rates.
Yeah, they are.
They're still great rates. Now, and then there's another thing that not a whole lot of people do, and that's the consumer counseling plans. I don't see a whole lot of those, but we have guidelines that we meet on those as well. 1 year from your payout on those for an FHA. If you're currently in one on a conventional, we can't do that. And then 1 year on a VA. So not a lot of people do those anymore. I think probably most people opt for the bankruptcy. Seems to be an easier thing to do these days than the consumer counseling plans.
Right.
But so that's what we're looking at when you've got some credit issues. But like we've talked about so many times before, if you have some credit issues, the best time for us to talk about how to overcome those credit issues is right now, even if you're not going to buy for a year.
Yeah, well, it
6
really
months.
is. Yeah, I mean, because it's New Year's resolutions time.
That's right.
You know, and look, you know, your credit is what it is. You know, and the thing is, and we talk about this, but folks kind of ignore it, and then they get in that cycle of renting. You know, and so they may have had a bankruptcy years ago. They may have had a foreclosure years ago, and they just think, I can never do anything ever again, you know, and it's not the truth. You know, you can actually be in the Chapter 13 and still get a house. There's a lot of different options for you. If you've had some trouble in the past, give Terri a call. Because
and another thing, when you call in and we talk about your plan for putting you back on the right track, again, I don't want anyone to think that I'm a financial planner. I'm certainly not. I'm a mortgage loan officer. That's what I do. My job is to get you a mortgage. But because I've done this for so long, I can give you some advice to head you in the right direction. But here's what I want to say about that. So make the turn.
Yeah.
When I tell you stop using your credit cards, look at what you're making here. I'm looking at all of your income. So put yourself on a budget. What a great time to start that. Mm-hmm. Is right now.
Yep.
Stop using the credit cards. Do what it is that we need to do to get you on the right path. Don't keep using the credit cards. When I say pay off a credit card because that's going to raise your credit score, don't go out the next month and charge it back up again. So take the advice and move forward with that and kind of put yourself on a budget and just kind of be aware of your financial surroundings.
Right. You know, and budgeting, you know, it's not fun, you know, if you're used to just flying by the seat of your pants, spend, and get. You know, well, you got to pay the piper at some point. And, you know, when it comes time to buy a house, that's usually when you got to own up to all that and pay the piper and start paying off a little bit of debt, you know, and getting your stuff in order. But just because you had some bad times, you know, maybe that's why you have some debt issues. Doesn't mean you can't buy a house. And, you know, like you say, Terri, I agree too. I think It is the American dream to have a piece of real estate. Everybody should have a piece of real estate. I just believe it, in my bones. That's the American thing, American dream. So,
and I think it's less expensive to own a home than it is to continue to rent.
Yeah.
I get amazed sometimes when I take an application from customers and they've rented the same house for 15 years.
Yeah, are
you
kidding
just
me?
paid that person's mortgage off for them.
Yeah. And now for our investor clients, they're like, shh, don't talk about that.
That's right.
But, look, there's a demand for the renters for sure.
Sure.
But, hey, folks, another great show. Hey, we are out for the next 2 weeks. We will see you in the new year. InsideRealEstateRadio.com. Have a great holiday season, folks. See you next year.